Aren't you tired of putting your money in savings account that barely grow? In this video, I will show you how to make safe, consistent returns using money market mutual funds in 2025. No stress, no scam, perfect for beginners. Let's secure that bag the smart way. If you're seeing my face for the very first time, my name is Betty and welcome to Betty Money Tips. I'm passionate about helping people to take control of their finances by saving wisely and investing smartly. So today we are going to look at how you can do that. So before we go on, please do like, share and subscribe to this channel. So today we're going to look at what is mutual funds. Mutual fund is like a pool of money that me and you and other people put together in one basket, and it's being invested and managed by professionals in that field. But before we go ahead, there are three types of mutual funds that we have. Number one is equity mutual funds. These are having stocks in different companies, and this is a long-time investment. It is high-risk investment for people that have high-risk appetite. It does not give capital preservation. This means that you can invest in this equity mutual fund, and if anything happens to your stock, your fund goes away. And if it appreciates due to the economy, the stocks return back to you with interest with your capital. The number two is a bond mutual fund. This is having funds in bonds in different organizations. This is a middle risk investment for people that can, okay, give or take, let me still risk it. And the third one that we are going to look at it today is a money market mutual fund. This is a type of investment that pulls money from people and invests it in a short term. It's a low risk asset, and they invest in assets like treasury bills, bank deposits and commercial papers. It's like a savings account, but this one is smarter because it gives you any daily and more. Then why should you choose money mutual fund in 2025? With rising inflation and volatile markets, safety is a watchword about your fund. Money market fund focuses on these things. They are being regulated by SEC, that is Security and Exchange Commission. These are the people that regulate and make sure that your money is safe, your fund is safe in case anything happens in the future. Number two things about money mutual fund is that it offers competitive returns between 9 to 18%. Some even go as far as giving 25% per annum on your fund. Another thing is that it lets you withdraw your fund anytime you need it available. You can decide within 24 or 48 hours your funds will be made available the bank that you provided. Another reason why you should choose it is that it requires low starting capital. Something as low as 5,000 naira. Even in some apps you can even use 1,000 naira to start up. And it's being managed by professional fund managers who have versatile knowledge, lots of experiences on that field, and they know which assets to invest your money with. Another thing you should know is that there's capital preservation. With money mutual fund, there's capital preservation. If anything whatsoever, the inflation goes up or down, anything happens in the market, your capital is being preserved. Another good thing about it is that why you should choose it is that it can be used for emergency funds. These are funds that you have in place in case of there's any on-call hospital bills like surgery and co, or your car suddenly breaks and it requires you some more money, or there's a need that requires you some more money. Instead of you put your money in your hand inside your savings, or put your money inside your account, or taking a loan, this can serve as an emergency fund for you. You can also keep funds that are not in use. If you probably have some money in your account that you're not using, why not put it in money mutual fund where it will yield interest as high as 18 or 20%? And you know that once you put your money in your account, it reduces because of all the charges that are accumulated on it. Another beautiful thing about why you should invest on money mutual fund 2025 is that you can reinvest your interest per annum. For instance, if you invest a certain amount of money, the interest charge on it, you can automate it by reinvesting it back, and what happens, it compounds every year making it to grow and multiply while you do nothing about it. And lastly, you can automate your bank each month towards money mutual fund, which it makes easier for you without you thinking or say, oh, maybe you have forgotten about it. Then the next question you want to ask me is that, where do you start from? There are past platforms well explained that you can start up and you are there. We have so many platforms in Nigeria today. We have ARM Money Market Fund, we have Stanbic IBTC Asset Management, we have Cowrywise, we have FBN Quest managed by First Bank Nigeria Limited, we have GT Fund Managers, we have Optimus by Piggyvest. These platforms are regulated by SEC, Securities and Exchange Commission. Your money is safe, your money is secured, and they have a track record of performance over the years. Then how do you get started? Yes, this is where it's getting juicier by the day. How do you get started? You choose a fund manager first. That's the way to start. For instance, I use Optimus by Piggyvest, and my own as my own fund manager. I use this because account opening with Optimus by Piggyvest is very easy. Even on your mobile phone, it's very easy. They are even regulated by SEC. Like I said before, make sure any fund manager you are choosing are being regulated by SEC, Securities and Exchange Commission, so that your capital can be preserved. Number 2, you create an account. And how do you do that? Go to your phone. I'll be dropping a link at the description below. Click on that link. It will take you to Optimus by Piggyvest. Once you open the account, it will require your email, it will require your BVN and your NIM, just like you are opening an account in a normal banking sector. Once you put everything in place, the interface will open to you and you can start saving. Then you go to the section for mutual funds. You will see Naira mutual funds in Naira or in dollar. Click on the Naira. You will see the portion where you can start investing. Then the next question will be on your mind is that, how much you will earn? Yes, with all this talk, how much is you earn? Okay, let's say for instance, you decide to invest 100,000 for your money mutual fund, and let's say the interest rate is about let's say 12%, just for this scenario, 12%, but you get more, you get between 18 and 20% per annum. That is 12,000 in 1 year without lifting a finger. So let's look at it. If you have put that money in your current account, do you think after 1 year, after 12 months, you will get additional 12% on it? Then even if it's 10,000, that's 10%. You still have 10,000 naira. Is that not amazing? And it's way better than keeping it in your bank. Let's look at the risk involved. There's no investment that is risk-free 100%. But with money market mutual funds, these are among the safest that you can think of. Number 1, your capital is preserved no matter what happens. The only thing that can happen if there's fluctuation in the market, when there's prevailing situations in the market, the market is a determinant of your interest. The interest might go down and the interest might also go up, so it depends. But your capital is preserved. What I mean is that if you invest 100,000 and your interest rate, for instance, is 12%, that's 12,000 per year. In case during the year the inflation drops, your interest will drop. Inflation increases, your interest will receive, but with a minimal amount. And what it means that your capital 100,000 is being preserved. So these are the things you're supposed to know before you venture into money mutual funds. Always know what you are venturing into before you start. Number 1, check if the fund is regulated by SEC, by Securities and Exchange Commission. Number 2, check their past performance records. But this is not a guarantee that they are going to do better in the future, but this gives you an head start that, okay, these fund managers have been doing this, these are the way they have been performing in the year past, and will give you an idea of what to expect. Then don't invest based on hype. Don't let anybody hype you. Know your goal. Check the liquidity of the asset ratio value. This means that when you are ready to withdraw your money, will your fund be available? Check the liquidity asset ratio value, and also check the charging fees. Some investment management charge 1%, some charge below 1%, that's about 0.5. Always go for the one that's about 0.5. And again, know the what they call the tenure options. The tenures can be 3 months. You can choose 3 months, 6 months, or 9 months, or a year. If you are going for 3 months, you should know, and you should wait for after that 3 months before you can make withdrawals. Also, interest is being paid at every quarter, but you get to see your interest dropping every day in your account when you check it. But interests are being paid every quarter, and you can only withdraw after the end of the tenure that you opt for. You can also decide to withdraw your interest, and this will be put inside the bank account that you provided, or you can decide to reverse that interest so that it can be compounded every year. So with all this, I hope that you'll be able to make up your mind to decide what you are going to do. And if you are afraid to invest at the first timer, this is your entry point. With this explanation, money market funds give you peace of mind while growing your money safely. Don't just save, invest smartly. If you found this video helpful, like, share, and share with a friend that you think needs this. And also please do subscribe, and let us grow together. I'll see you in my next video.